AOL CEO Tim Armstrong tells Bloomberg he is reorganizing to combine its dial-up internet access business with its web services, including AOL Instant Messenger. Armstrong says the new AOL Services Group would be one of 4 business units to be created under this new structure. And joining us from New York is Bloomberg Industries analyst Paul Sweeney. And Paul, first of all, what's your take on this? How does this particular reorg make sense?
Well, I think this reorg makes sense in the sense that AOL is really trying to reignite top-line revenue growth. And I think they're expecting that this reorganization will better align their businesses to operate on a more integrated basis and hopefully drive revenue. That really has been a challenge for AOL over the past couple of years.
The bottom line, though, is that AOL, Armstrong has been there for now 3 years trying to turn this company around. Can AOL really be fixed?
Well, that remains to be seen, and the stock price certainly suggests that perhaps not. The stock is down 40% year to date, and it's underperformed its internet peers. So the market is very skeptical, and I think what the market is really looking for when they look to AOL is to see some consistent top-line display advertising growth, and we just haven't seen it over the last couple of years. That said, AOL has actually done a better job over the past couple of quarters in terms of growing their organic display advertising business, and investors want to see some consistency going forward.
You think he's putting the pieces in place for a possible spin-off of this business?
It's possible, and again, with the stock price decline, it certainly makes that more possible. But I think clearly he was brought on board. He came to the company. He invested his own money in the company to try to make it work. He clearly has a vision for investing in key brands such as the Huffington Post, TechCrunch, and even their local business Patch. So he's really trying to invest in the company, in their brands, and use that to drive traffic and revenue.
He told me when we sat down a couple of weeks ago that Patch would take years to be profitable. How long does Armstrong have before Wall Street turns on him for good? You know, how much time does he have to make this happen?
Well, I think every quarter it gets more difficult for he and his management team. And I think, again, he needs to show a couple of things. First, on the Patch, as you mentioned, he needs to give the street some clarity that these Patch businesses, and there are almost 900 individual Patch sites around the country, he has to give the street visibility that those businesses can turn profitable in a reasonable amount of time. And then overall, he needs to show the street that he consistently can grow his top line more consistently.
We'll be watching for that. Bloomberg Industries analyst Paul Sweeney from New York, thanks for joining us here on Bloomberg West.